Hour. Final 30 minutes. It is just after 3:30, November 13th. Standard price 67.37 SPX. We are certainly down on the day. We've had a pretty reasonable slide. I just had to make some sense of some of the day trades that I put on and figure out where I'm at for the day. So right now, ended up closing out a couple of the lower hedges in the 67.15 to 67.05 zone. I'll do the math on that. So it was a let's see, 13. So 1610 minus a 1375. So I'm up 235. Actually, it was 1640. Sorry, 1640 minus 1375, up 265, minus 190. Had one hedge that netted $75. I just had a butterfly that closed out for $100. So 75 plus 100, I'm up 175 for the day. I have another broken wing butterfly that's going for 65, excuse me, 65 cents, and has a profit trap at 67.35. So if we can somehow get right around that 35 zone, or higher is fine. But if we get in between 35 and 40, that is a profit trap. So right now I'm showing some profit on the broken wing butterfly. Potentially this has a profit trap of $500 if we're right at the 67.35 handle at close today. So I'm just going to hang out here, $175. I did take a loss for a daily profit play, which is a minus 310. That puts me out at 135 on the day. So if the goal is to defend the day, I'm hoping that I can defend most of it. I'd be down 135. If I win on the broken wing, then that would be adding a $65 winner. I'd be down 70 bucks on the day, which is certainly not bad. If I get lucky on the broken wing, I can make another $400 to $500 to net me out positive for the day. I still have a hedge going into tomorrow. I put this in for double ups today. It's up $10. It's not really going to be super important until we come into trading tomorrow. If we open up tomorrow around 67.30 or 67.25, that actually could be a pretty good spot to fill me for a couple $100. So we'll hang out here for the next 25 minutes. I'll see where the price closes. If my broken wing butterfly is going to start offering some additional profit, 65 is a likely profit as long as we stay above 67.35. Near the end of the day, that butterfly trap fills, and possibly getting lucky with a up to a $500 profit trap. We're trading at 67.40 right now, so I'm a little bit clear of the pin price. But if we stay above 67.40, that's a full $65 winner. If we are inside the 40 and 35, that is a profit trap. My break even on this trade would be 67.30, so I do have a little bit of wiggle room there. This trade, part of me wishes I hung on to this one. This trade is $1.90. Now it's trading for $2.50. Dadgummit. All right. It's fine. It's going back and forth. It's moving pretty quickly. This one potentially has a $900 profit trap. I closed this one out a little bit early. Possibly should have hung on to that a bit longer, but whatever. We will take a look. So I'll be going back and forth between my prices watching this broken wing butterfly, trade for the ironfly tomorrow, and let's see where we're at. Did some pretty good calculations today. The VIX was up to 21 plus. Let's take a look at this on the 10-minute chart. So the VIX on the day got up to about 2130. So 21. Let's see what the high was exactly. That was around 2134. So 1.33%. If we look at price for the day, let's see what the intraday open was. If it went about 1.33%, there's your bottom of the day. We went out 1.42. So that's rare that we see price action exceeding the VIX, but right now it's inside of that. So pretty good way if you're monitoring the VIX for the day to kind of get your high probabilities, tops and bottoms. We'll see where the day closes. Okay, is anybody in some trades with me? Broken wing butterfly filled for $1. Guessing that we would be. This is a trade that I posted this morning for my daily profit plan. That trade's looking pretty good. That would have been a. I'm trying to think what the defense levels were. Would have been a 35, 67, 40 or 35 zone for $1. So we should be looking good on that trade if you're in it. It may have been offering more, like $1.50 to $2, which obviously is even better. So, all right, we'll come back and do this. Let's go top down. So, are we doing any, technical damage? Not really. We're back below the 21-day moving average. Heat map's going to be pretty nasty today. 78% of stocks in red. Yikes. So, all looking a little bit fragile today. Led by Mags. Mags is down. Mags is back down after a 2-day slide back to the 50-day moving average. I do have some legitimate concerns if we close below the 50-day and we close below this October 10th candle. This market may break, retest, and we might be talking a pretty severe downturn. If we're going to be led by tech, tech leadeth to this all-time high run, and tech can also taketh. So just keep an eye on this, because similar to what we saw back in this February, March, when the market started to roll over aggressively with mags, watching this floor, it'd be similar to watching it back here in January, February, March. Once the mags broke here, that led the big topple from March to April. So if we break this October 10th low, you don't really want to see this, but we could be selling the rally, and that's going to drag tech down pretty aggressively. All right, what else on the day? $1.90, now trading for 250, 280, 250. I'm looking at the mid price here, 250, 270. It'd be nice to grab another $80 out of that. Still a lot to happen here in 20 minutes. Okay, so SPX. $50-day moving average last Friday, October 10th. Watch that candle. I posted a video on my Telegram and on TradingView, Twitter, YouTube. I did a post. You can see that right here in my Telegram. So this video is about 30 minutes. Talk about some key levels. What I'm watching, most of the major U.S. indexes, watching gold, silver, Bitcoin. Bitcoin's below 100K right now. U.S. 10-year, which is up slightly, and looking at currencies to see if we have a basket of strength or weakness. DXY is rolling over a little bit. Swiss is strong. JPY. See what's happening today on currency strength. Swiss is strong again. Here was yesterday. Swiss was strong. Today, Swiss is strong. Dollar is one of the weaker currencies, along with Aussie, New Zealand, and CAD. So Swiss strongest. Then pound and euro. Japanese yen's pretty baseline. Yesterday, Japanese yen weakness. Swiss was strongest. Swiss yen went to all-time highs. Again, this is now 1, 2, 3, 4, 5. We are getting overbought conditions on the Swiss yen. I do think technically this is a good-looking trade. We just haven't had any real confirmation to roll over and sell yet. I kind of warned, I don't think we really want to see crazy strong Japanese yen. If you go Japanese yen futures, I will probably get long Japanese yen futures, or at least get long FXY if we're back into these lows. This is the inverse of the dollar yen. So no major sell signal provided yet, but if we are into resistance, if I was going to trade this with FXY, I can just kind of buy and hold. If I'm going to trade this in the futures market, I can do futures options, but I'm going to see if this will roll over. If I'm going to trade in currencies, I want more confirmation. So either this is going to be a, resistance level that comes back down and we stay in this kind of channel in the dollar yen, or we start looking to see if this wants to go up here and pause what, kind of builds up here, maybe run some stop losses, turns and reverses, and we have some type of, reverse cup and handle pattern that ends up going all the way back down. I could see the dollar yen being this type of wild and crazy behavior where it just makes traders nervous, but ultimately confirms. Sell stops lead us all the way back down to 140. The crazy part is if we get back to 140 and break it, I think we go to 120. But that would come, an accomplished trade of, me saying that I'm going to short the dollar yen all the way to 120. That might come with a lot of pain in the stock market. So be careful what you wish for. So I'm not confirming that yet. That's not a trade that I'm in yet. Not yet. Do you think investors are waiting for NVIDIA earnings next week? I'm sure there's a lot of positioning around NVIDIA for sure. I mean, it's a $4+ trillion company. We give back the 5 trillion handle. We're down to 4.54. This is a little bit lower to the. I mean, this was kind of right in the middle for the last couple of days, so I was expecting this to come into earnings next week with a pretty nice range trade. Now we're testing the lower end of this, so we'll see if it ends up coming back into. I would imagine that Nvidia earnings are going to be pretty positive. It doesn't mean that the stock's necessarily moving because usually there's just big moves. Prior to earnings, it's kind of a nothing burger during earnings, and then we see where the overall market's going to take us. But this level here, plenty of dynamic support on Nvidia. So we'll see. But yes, earnings next week will be a big deal. I think it's on Wednesday or Thursday next week. So this is going to be Wednesday after close next week. And of course, all eyes on Nvidia for sure. So government reopens. We don't have any CPI data. We don't have any PPI data. I think they get removed from the calendar. All we really have to go on is price action. And today, everything is soft. So let's take a look. Macro top down. SPX, S&P down about 1.6%. NASDAQ down nearly 2%. Here's your NDX at 1.95. Qs at 1.98. Your Dow at 1.57 after hitting all-time highs recently. So, again, probably some chop at the top here. But if it's highs, pullback, highs, pullback, highs, pullback, this could be some consolidation. If we round out this top, be distribution. If we roll over, I'm a little cautious. It's important that we don't do too much technical damage on these markets. I talked about this I think it's just one of my live sessions I did this week. I mean, if the market is going to roll over and just stay sideways, that floor becomes all the more important to make sure that it holds. Because if this holds, or I'm sorry, if this doesn't hold and it breaks, if this breaks, even a measured move gets a lot uglier with any type of wave structure. And this rally, if this is finally putting in its top, I mean, it doesn't have to be extremely difficult to see take a low, take a high, and where could this market fall? 30%, 38% pullback, 50% is equilibrium. If we're coming back to a 50% pullback, we're doing some serious damage on the technicals where we're taking out 200-day moving averages. We're looking at maybe that death cross of the 50 and 200-day. So I'd say the bulls are going to want to do a pretty good job of continuing to defend this 50 period moving average. And it could just be noise. I mean, Nvidia earnings could kind of save the market. It's November 18th, maybe into the end of the year. Nothing really rolls over. The one thing that is a little different for the last couple of weeks is we have seen the Fed probabilities. If you go to CME watch tool for the Fed, the biggest change is now it's about a 50-50 shot, which is kind of crazy. This was at one point 80+%, 90+%. Now we're literally 51.9 to 48.1. I don't think anybody can say with certainty what the Fed is going to do in December. This has gone from extremely high probability to now not. We don't have inflation data. We have some dissent in the Fed, but I mean, your guess is as good as mine what happens. And this is another thing that's going to be wait and see. Does the Fed ultimately cut rates? Does it boost stocks? Government's reopening. Does it boost? I mean, yeah, we reopened today. The government is open. Great. Doesn't mean anything's good. Not yet. Nothing good is happening. Markets are down 1+% today. Russell is down, 2.7. Wow. That's a nasty. I mean, that's below the Friday the 7th when we had that big pop off the 50-day moving average on the S&P and the NASDAQ. The Russell's back down below that. So, just I'm a little cautious. That's it. And we have been. So we're long the VIX. We've got some hedges. I'm hoping that the market's gonna give it all back, stay and cling to these levels in a year if we drop 10, 15, 20%. But just, one day does not define anything. One day is not a trend. We're down today. Okay. But my goal is, can I minimize the damage or at least win the day? I might get lucky on a trade today where I win the day. Here's my broken wing. I'm up some bonus profit right now. I'm still doing the math. If I had a 75 and 100 and 65 on the winner, I'd be down. So if I can sneak a little bonus profit here, we'll see. Give me a little bit of wiggle room here in the final 12 minutes. This might be difficult to close, but I'm going to see here if I can get some bonus profit. I'll set this up at $5 profit trap. I'm going to go like a 350 profit trap. I'm going to go 350 credit. I don't know if the broker's going to even fill me at that price, but I'm going to ask. So the perfect trade would be a $5 settlement at 67.35. So live price 67.42. It gets a little bit sweeter in my profit trap at 45. So if we're down another 4, 5, 6 points, maybe I can sneak in a couple $100. So right now I have it calculated out to only lose about $70 on the day. So if I get a profit trap, maybe that profit trap offers me some net. Let's see. What do I mean, technically I need a dollar. If I get a dollar bonus plus the 65 cents, that wins me the day plus a what? 70. I mean, it gives me about $40 on the day. I'll go $1.50, give me $100 on the day. Okay. So we'll see. Live price at 37. Come on. So it's in the bonus trap, but it's all about those. It literally is like the final, 10 minutes of trading today. Let's see if we can stay above 67.35 to 67.40 is ideal. It might be difficult to get the fill that I want. It might have to be cash settled. It's sometimes a little slippery. All right, what else is going on here? Yeah, we're not going to get that data. This is the one thing I talked about. I'll put this up here. Trading at 36 right now. So trueflation. This is a pretty easy measurement. If you want to see what inflation's doing, I wouldn't rely on government CPI and PPI prints. I would go to this website here, Trueflation. And if you look at the U.S. inflation index, this is a third-party measure move with a lot of other pieces, not just, it's not CPI, it's not core CPI, it's not super core CPI. This has a bunch of different metrics. Now, what I can say with this is we had a lot of sideways inflation. But if you go from the bottom in August, okay, to September, to October, to now November, this is showing us that inflation is not necessarily contained, right? So this is putting the Fed in a very difficult predicament, which is higher inflation plus weakening jobs. I know that some people like to say that stagflation shouldn't happen, can't happen, is a outdated term, but we are seeing higher inflation that is nowhere near our 2% inflation goal. And this isn't necessarily, the CPI that we get from the government is the 2% inflation target. Well, we're above that right now, right? The last print we had, headline CPI was 3%. And the core CPI was 3%. The CPI headline was 3%. And I'm showing this trending higher still. So if we did have data this week, it wouldn't surprise me if the inflation number, if true, was over 3%. And how does the market react to that? I don't know, maybe unfavorably. Yeah. So we'll ultimately see, if there is data, what does it mean? Do we have non-farm payroll coming, this month? Are we going to have any makeup news, makeup data since the government is reopened? Or do we have to just simply wait for it to line up on the calendar? So what I see for tomorrow, no news, right? So everything was tentative at 8:30. The Thursday CPI, Friday PPI, no longer on the calendar. Going into next week, do we have any news next week? Does anything pop up? Let's go high impact. Anything Wednesday? More Fed speakers. Anything Thursday? No major news. I don't see tentative on here, but I don't see any headline news either. Just Fed. Look at this. All Fed talk on Thursday. All right, 8 minutes to go. Am I getting a profit trap here? Getting a little bit better. I'm up $100 on that broken wing. Okay. So that's 65 cents on the credit plus another 40 to 45 cents on the bonus. Okay. Come on, baby. Get really sticky around 35. I need, just like 1 or 2 more minutes in this zone, and that might help give me the push that I need. Come on, stay here around 35. Don't be a jerk. Bonds are higher. Bonds or bond yields? Bonds are down today. Yields are up. Yeah, yields are up. So, they're not radically changing, but it's not a good look either to have the Fed down from cutting rates in 2024, cutting rates again in 2025, and seeing yields, higher than where we started cutting rates over a year ago. So, markets will tell us. All right. Don't close at the lows today. So my break even is 67.30. Technically, it would be 6729.35. That's my break even on the broken wing. So it's possible that I end in a little bit of a bonus trap as long as it's between 30 and 40. But anything below 6729.35, I'm taking on a little heat. This might just cash settle. Don't close at the lows today. Lows today around 24. That'd be a loss. But we'll see. Come on, 6 minutes. Just get sticky around 30, would you? 30, 35. Is the VIX going up? A little bit. See if the VIX breaks these highs. All right, let's keep going. Top down. So there's yields. U.S. markets down. VIX up. VIX is up 20% today. Crossed over 20. Dollar index retreating for a couple days here. Is this a pullback to the backside of the trend line? Is this kind of 98 handle? 98, 98.50 a support zone for the dollar to continue to head higher. We'll see. Oil, pretty nasty candle yesterday. My futures trades are still good as long as CL stays above 50, which is at 58 right now. That's in December. Natural gas, doing pretty well. I haven't sold anything against it. I have a $5 long call or a $5 strike. It's a 5-strike long call on natural gas. I'm going to look to see if natural gas gets up into the 20s again, and I'll probably take some profit there. Gold, see what happens. I'd love to see gold hit the daily or the 200-day moving average. I've been talking about that now for a month. We had this blow off top. I wasn't chasing gold long as this thing ran up and kind of got bubbly above the 4,000 handle. I was protecting profit. I've now dollar cost average into gold with just one position. So one position on CEF, PHYS, GLD. I've got some naked puts and ratio spreads on GLD. Silver is testing. I mean, silver jumped right back up to the highs. I think silver could be maybe a chop zone where we go high to low, just very volatile here to shake things up. Gold might have a lower high to lower low. I still think this magnet is the 200-day moving average. I do want to dollar cost average into gold. Broken wing now up $200. Sweet. Let me see if I can close this thing down. 125. Maybe I can close it for 125, 130. Come on, 3 minutes. Give me a magical 3 minutes, would you? I'll try that 150. I know that's profitable on the day. $130. Okay, close out for 130. All right, so let's do some math. 275 minus 190 plus 100 plus a 195 minus 310 made $70 on the day. Not pretty, but still made net profit on the day. I'm curious where this settles. We're at 35 and change. I'm just going to watch this. So I got out for $1.30, trading for $1.45 mid. Now I can just kind of entertain myself for 2 minutes. I'm always curious if I did a better close or a worse close by the end of the day. So in 2 minutes, but I will take the win. So net on the day, I'm going to update this for DPP. All right. Net results. Hedges helped. So I had minus 310. So this is a DPP minus 310. Hedge for 195. Hedge for 100. And a hedge for 70. So that would be 310 plus 195 plus 100 plus 70. 55 in the day. Okay, we're at 34.21 right now. We're inside that profit trap. I'm just going to sit here and hang out for one more minute. We're at 67.33. Where does this thing cash settle? I'll do the math. Thoughts on silver long term? Yeah, I'm definitely long. I'm long silver. I'm long gold. You can't talk me out of either one. I'm probably going to up my allocation from like 10%, probably 10 to 15% for each one. I think gold and silver, again, with dollar cost averaging, I'm not just going all in. I think you need to be, tactical. 37 looks like we're settling in. That's a bonus trap of 2 and change. So my broken wing butterfly helped a ton. Looks like we settled at 67.37, which would have given that broken wing a 255 winner plus the 65 cents. So 65 plus 255, and then the 100 hedge, and then the 70 hedge, and losing the 310 on the day. So the difference is I made about $60 on the day versus cash settled. It would have been 180. Either way, my goal is to win the day. Playing some defense, the market was down, 1.5%. I'll take a net winner on the day. Tomorrow, I will see where we're at. We're at 38 right now. Coming into tomorrow's open, I still have this trade on for tomorrow. This iron fly that I posted for double ups. Let's see if we can get this to open up tomorrow. I'm going to build this one out. So I took this for 14.10, which means it's only a $90 risk. This is going out to tomorrow. I think I already have this one built in option strat. Let me find it. Shoot. All right, hang on. Option strat, build, iron fly. Expiration is to tomorrow. And pin price is the 25, 25, 15 wide. So 25, 25, and this would be 10 and 40. So if we come into trading tomorrow morning at 9 a.m., tomorrow morning, 9:30, I might be able to open up. If it opens up around today's close, then I should see about $90 of profit, which I'll happily take that. That'll kind of help, I don't know. That'll help for what I was risking $90 a month. $90 is 100% winner on double ups. I'll certainly take that. If it opens up a little bit softer tomorrow, we open up somewhere in my profit trap zone between like the lows today around 25. 25 puts me up about $120. So coming to market tomorrow, that's not bad. If I can grab another 100, $120, that might help me, one, not have to take a double up or a daily profit play, grab a 100+% winner on double ups, and also pad, today's winner for like $60, padded by another $100 and win the week. Okay. All right. Let's get some comments here. Rate cuts become a strong possibility. Gold and stocks will probably rally. I mean, yeah, the idea. Look, if we're going to cut rates, I'd see gold, silver. I don't know if they're going to turn right around and rally. I think we're due for some volatility. Look, I'm telling you, gold is not going to run too far without having a touch of this 200-day moving average. Okay, I'm putting it on the radar. I've been talking about this for months. It was a warning to not get overly bullish on gold after this thing was popping and getting like, kind of hockey stick type breakouts. I mean, what's crazy is I think gold still maintains a bid. I think there's going to be, shaking out the loose hands here at the top with the 10+% correction. But if it's either a very quick correction like so, gold gets bought aggressively, and then maybe this is a quick resumption of the trend. Okay. But if we go right back to highs, I think gold is going to be a bit of a faker to the top, and we're going to end up finding this pullback zone. So I am trying to be patient, and I'm saying this because I have been in a 3-year trade on gold and a 3-year trade on silver, and those campaigns have worked out very nicely, and it was appropriate for me to take profit. But I do want to reallocate and add more exposure, but I'm going to start by dipping my toe in the water at several levels versus just taking a say now and say, I'm just going to get gold long and just stay long, because we might be dealing with a 20+% pullback. And same thing on silver. We could easily have 20, 30, 40% corrections before we resume the bigger picture. Look at this move. If we take a low to high and we just have some type of pullback. And if we're familiar with Fibonacci's here, like a 23 to 50% pullback zone, there's plenty of pullback opportunities on gold, and it's still a bull market, right? You go way out here to an outer trend line. You go way here to an inner trend line. There's still plenty of levels to find that are much lower than current price. So it usually consolidates. And so I'm not in a hurry to throw a big position in on gold when I can just take some dips and like I said, dip my toe in the water for some stabs. Okay. All right. Inflation higher. Yeah. Money in the system. Yes. I mean, if you have asset prices, that's a good thing. EMC's asking how to get started stock trading. I mean, if you're brand new, um, I mean, there's some easy stuff. I would say if you just want to trade stocks, then I mean, Warren Buffett, Charlie Munger, Benjamin Graham are pretty good places to start for value investing. If you're thinking more, I want to get involved with more active stuff right now. I would say probably take a look at option trading, which I do a lot of. I've got a course for $27 that I think is a good way to get started if it makes sense. Then you can kind of carve your journey out from there. But it's just ways to express how you want to trade the markets. There's ways to make in an option trade, like for example, today, I had a trade where my loser was of the loss that I incurred. So I had a 310 out of 100. So I took a loss of $3.10, and then I had hedges that all paid me over 100%. So I was able to win the day today. I mean, the percentages are pretty crazy when it comes to options because my broken wing butterfly, for example, closed it out for 195, and my max risk was I guess 335. So I made 58% on the broken wing. I had a hedge that was a risk of 90. I made 100, so 100 out of 90. I made 111% on a hedge. And I'm trying to think what other one. There was a loss on a long put. There was another iron butterfly that made me 90 cents that carved out like $300. So I made 275 out of a $90 risk. That was 300%. But again, I don't want to just throw these numbers out there. All it means is there's a good way to start trading the market, right? I think if you have if you want to be a stock trader, then you're probably talking about a 50 to 100K account. If you want to buy stocks and own stocks, you probably need, 25, 50, 100 grand. Start investing, build a portfolio, think about your pie chart, how you want to invest, maybe 60% of your cash, 70% of your cash, leave some dry powder just in case the market's going to pull back, because you can make a lot of money when the market pulls back aggressively. We get a 20, 30% correction, 20, 30, 40, 50% correction. If you got liquidity to buy and scoop up those bottoms, you're going to make a fortune in the next maybe 5 or 10 years. But it's going to be a painful ride, and you'll sit on some drawdowns for a while. But trading options, you can be a little bit more tactical. You can risk way less money. You don't have to be overall exposed and tied to the markets, and you can just choose a trade. You can make money in an options market. If price goes up, you can make money. If price goes down, you can make money. If price goes sideways, there are strategies that literally take advantage of taking, nowhere. Price goes nowhere, you make money. That's like you want to make money going nowhere. Daily Profit Play does a great job of that. You want to make money with margin for error and swing trading indexes. I do that here. We trade earnings catalysts, news rakers, double ups. Took a trade for tomorrow. We might end up making over 100% tomorrow on double ups. Proper hedging the portfolio. A scanner that gives me great technical setups and direction, and then discretionary trading, how I manage my portfolios. Okay, again, good place to start. And I'm just curious. Like I built this course out for my nephews at the time when I built this course were 16 and 19, and they've been asking me for years how to get started. So I built something for them. I've also given this to 80 plus year old clients of mine that are just curious on how I do this stuff, because they see that we're making pretty consistent profit even when the market's flat or up or down. We carve out a pretty good gain every single year. So how do we do it? Active management, right? So here's a good place to start. Let me see if this will take you here. So I can just grab the link. $27. If you like that, if you have any of my classes here, if you have any of these classes and you upgrade to a lifetime access to these classes, I will give you the full course. The full course is usually $500. The quick guide is $27. If you don't want to get into one of my full courses for, Daily Profit Play is like $1,000, and Waterfall Income's $1,500, Newsbreakers $1,000, and If that's not you, then for 27 bucks, get started. If you like it, you can upgrade for 497. So I'll share both the links if you're interested. I think that if I were to teach anybody how to start from scratch, I would teach you how to trade options. I don't care if you want to come in and be a futures trader. I don't care if you want to come and be a forex trader. I don't care if you want to be a stock trader. I would say, look, if you learn how to trade options, guess what you can trade options on? Everything. You can trade options in currencies. You can trade options in futures. You can trade options in indexes, options in stocks, options in crypto, for crying out loud, right? So it is a derivatives market that since 1973 has been one of the most sophisticated ways to trade the market. And it allows us to be better risk managers and also leverage our capital. It's not a leverage market. Okay. What I mean is you can leverage your capital. It takes far less capital to take an option trade than it would if I was going to buy a stock. Here's an example. Okay. Let's say we're talking about NVIDIA. If I wanted to buy one share of NVIDIA, it's going to cost me $186. One share. Okay. If I wanted to say, you know what, for one share, and that one share goes up to all time highs, I can make 13% on my $180. Let's talk about that. So if I make 13% on $186, I can be up $24 in profit. Okay. So here's another example using options. If I'm going to spend $186 and I can make at all time highs, the market has to go up 13%, I can make a whopping 24 bucks. If I were to take a trade that I might risk $50 to make $50, or a trade that I risk $100 to make $100, that's an option trade. There are lots of ways to do it, but you can get far more bang for your buck and far more value and just simply have a narrative. Is this a stock or asset or index I think can go higher? If so, how do I create a trade that allows me to benefit from that move? If I think this stock goes down or index goes down, can I benefit from that move? That is an option trade. Okay. All right. Good stuff. Okay. It's not brain power. It's not. I get it. I mean, look, man, if you're doing well with what you have, if it's not broke, don't fix it. I'm just saying from, my personal experience of, I was a full-time currency trader. And I mean, I still am, but it's so much more passive than it used to be. I used to be a full-time currency trader, ran a currency fund and had over $8 million in assets. And I have diversified the living daylight side of that thing where now it's like 1/10 of that portfolio is in currencies and the rest is in options, stocks, indexes, options, and crypto, gold, silver, oil, whatever. Diversified. So, and the reason I've done that is just it's a good amount of capital. My risk adjusted returns have been better than ever in my career, ever, because of incorporating options. And like I said, if you learn how to trade options, you can trade options in all sorts of asset classes. If you love currencies, you can trade options. If you love futures, you can trade options. If you love indexes, you can trade options. You love stocks, you can trade options. So, is it a learning curve? Sure. But like I said, for a starter course, some foundational education, if it makes sense to a 16-year-old, if it makes sense to an 80-year-old, I think probably have a lot of followers out there that are watching this that you're somewhere in the middle. So it's not too heavy, it's not too intimidating. It is designed where if I could just teach you from scratch, these are the things that I would want to know from day one. If somebody said, Chris, I'm going to teach you options. Cool. Teach me the fastest way possible. Right? Teach me the most, realistic, applicable way to learn how to trade options. That's what I built the course for. All right. Good stuff. Okay. Sounds good. All right. Anybody in daily profit late today? How we do? I'm just curious on the day. Do we finish the day? So net profitable, I'll add in here. I left some money on the table. So a couple of, I mean, again, this is just kind of what happens, but this trade would have been closing out. Trying to think where the thing settled. 50-50. I'm looking at all my trades today. Just go filled. So that trade for $1.30 ended up closing and settling around 250. So I left about 120 bucks on the table there. This trade, I don't know exactly where this one would have settled, but it's at 30. That was a 90 cents. So from a 45 minus 6737.49, Oops. So 67.45 minus 6737.49. Gosh darn it. 737.49 minus 6745. Okay, so 751. That trade would have given me $751, 910 minus 7.51. So I'd have made another $160 there. So I mean, between the broken wing and another hedge, probably 250 to $300 on the table that I left, and that's okay. It's I made money today. I'm happy to do that near the final minutes, and it settled for a few bucks more, but better than losing. Certainly always happy to take a winning day and defend. But let's see where the market goes for tomorrow. Okay, all right. So let's finish up the top down here before we go for the closing bell. Markets are down. Any major damage done? Not necessarily. Mags is down. I feel like we're getting a pretty heavy rotation into Mags right now. There's still a lot to happen. I mean, if we have any news that comes out, does the market actually get to react to it? Do we get inflation data? Maybe. Do we get employment data? Maybe. Mags is down, but probably some resiliency built into current levels or this this October 10th candle. Rotation wise, I mean, sector wise today, I'm pretty sure everything was red. Heat map was terrible. So if we go sectors, you go to heat map today. Where do we close? 75% of stocks down. Just blood red across the board. That's a pretty terrible broad market day. Take a look at sectors today. The only thing flat was staples and energy. So where's money rotating? Again, it's a one-day thing, and one day doesn't make a trend. But there's clearly money in the system that's rotating into defense. So whether it's staples, that's certainly more defensive. That's lower volatility, low beta. If it's energy, that is probably the easiest way to get non-correlated. So if you don't want to take any pain from the S&P, get into energy. If you want to go defense and park it into some dividends, park it in some low beta consumer staples. It's boring. You're not going to get crazy upside, but it's certainly better than watching red, red, red. The fastest movers will be discretionary, services, and tech, most likely. Tech is always what kind of leads the declines, leads the rotations. So tech could be what falls the fastest if it continues to fall, but staples and energy, a good place to rotate into if you're worried. Okay. All right. So that's where we're at for today. Come back and join me again tomorrow. I'll be live tomorrow at 9 a.m. We'll set up another daily profit play, waterfall income. I'm going to see how many new members I have for tomorrow. We might have a masterclass sprinkled in tomorrow afternoon. And because the market is down, we might actually take another trade. I might look at another 10 to 15% buffer on strategy 2 and take another waterfall income trade if I have some members that are interested. So daily profit play in the morning, an afternoon masterclass, possibly a live trade on waterfall. Double Ups has a trade running tomorrow. If we open up around current price, today, or we slide a little bit lower in futures, this actually could work out very, very well. That trade is a pin around 25. So if we open up tomorrow around the lows at 30 or 25, so 67.25, this trade could probably open up tomorrow with about $100 to $125 winner. That I'll probably take right off the table. That's a $90 risk for $120, $130 profit. I'll take the win, and that'll be a nice little winner for double ups. We'll see if we get there. Okay. All right. What else? Let's keep going. Just top down really quickly. International markets, FTSE falling. DAX still choppy. FTSE's taking a pretty big, evening star candle. Argentina, after one big gap on the bailout announcement. China down for the day. Brazil down slightly, but making good progress. I like Brazil and Latin America, EWZ, ILF. I like those a lot. Apple sideways near all-time highs. Amazon retreating. We had a big gap up, fading that gap. Broadcom fading. Google choppy, overbought conditions. This could just be like time for a seasonal rotation. Mags has led the way. They're going to continue to do well. They just they may not be as high flying, momentum and growth stocks like they once were, because now that we're here and they're kind of mature, it's the law of large numbers where it's harder and harder and harder for them to blow away these earnings expectations. On top of that, they're spending, 10, 20, 30% of their sales in this AI build out. So I like the idea of staying somewhat boring. I don't mind energy. I love utilities. I like industrials. I think if we have higher inflation, we're going to see, the need for energy, the need for computing power, the need for commodities. Gold, silver is not a bad place to be. Oil, I'm pretty bearish on. I think oil can slide back into like $50, maybe 40 and 30 even. That's maybe 12, 24 months from now. But if we do back the truck up to oil around $40 to $30, I think the upside is 100+%. But we've got to be ready for oil to fall first. I like natural gas long versus oil right now. Meta, I do have a December expiration out for a 610, 615 bull call spread. Microsoft waiting, no trade. Netflix took profit on this one. Nvidia earnings next week. We'll see what that does. Tesla, yikes. Tesla down a decent amount. That's where most of my red came from today. A lot of it is, option premium. A lot of my options are down here in like the 250s and 240s. I bought some shares. I added some puts. So let me see how those puts are looking right now. It's nothing I'm going to be protecting that I have running on. Okay, I might start for Project Options Edge. I might start combing through and taking some profit tomorrow too. Just free up some more capital, tighten up some risk. So here, and I've got a couple of puts. So I have the 250 and 200 put right here. Right now, those are up about $530. So that collar trade, this is kind of nuts. It's already up, 49%. That's pretty well in my favor. So this is down to like 60, and at 401. So I've got, those puts can continue to help me lower the cost basis. They might turn into bigger wins if I need them. Ratio spreads at 220. Some income here. This is another $1,000 profit trap, which lowers my cost basis by another $5 or $10, and then some puts at the strike. So there's some creative stuff going on with Tesla, but it's a good premium stock. But anyway, it's kind of stuff. It's tough to hide out when the markets are all red. Like days like this, when it's like 75 to 80% red, it's tough to hide out. You can see where money's rotating. So if people are looking for hideouts, you're hiding in boring stuff. You're hiding in bonds. You're hiding in energy as non-correlated assets. You're hiding in staples because they're usually low beta and maybe some good cash flow. Maybe nothing's perfect though. When everything starts to go red, it's tough to make money unless you are properly hedged. Okay, but it is pretty easy to not lose a ton of money when you are playing defense. And at least today is, if this is the start of a bigger rotation, then we'll have to watch. But, is this an overreaction? I don't know. Not yet. I would be more concerned. Okay, legitimately, I'd be more concerned if the S&P is down below this October 10th candle. Because at least on this short-term rally last Friday, at least it showed that the bulls were available to jump in on that 50-day moving average. If we take that out, we take out this 10th low, then yes, I'd be more concerned that the structure is breaking. But usually we don't see the markets just top and fall. Usually the big topping patterns are sideways, 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 and structure rolls over. So the stock market is usually made up of V bottoms and rounded tops. That's when things get a little ugly. So, all right. My long oil, I am, but with a trade in futures, and oil has to stay above $50. So for right now, it's only out to the middle of December. I don't think we're going to get that much volatility in oil. Anything can happen. But even if we clear the lows here at 56, my CL trade is mid-December, and it is currently up 70.5%. So I need a little bit more time. The probability of profit on this trade going out to the $50. I also have a $500 profit trap. $50. There's my expiration. I'm trading this at like a 7 delta. So right now, even with current volatility, there's a 93% chance this will trade for full profit. I'll take that. I'll take that probability, and I still have a profit trap there if I need it. So this is out, 33 days. So unless we have some really dramatic volatility that just, hey, everyone wants to enjoy their holidays. Well, how about we give them a big old turd sandwich with a giant scare of volatility at the end of the year? If the market just kind of stabilizes, then this trade's probably fine. Most of the market's probably fine. It's just let's try to put in some type of stabilizer. I'll see if I can identify that these next few days or next week. Um, but like I said, if we take out the October 10th candle, I'm definitely more concerned. So as long as we kind of stabilize in here, we can have some 3, 4, 5% oscillations. But if we drop a quick like 10% and the market doesn't immediately bounce back, then buckle up for some, probably a crazy end of the year. If you recall, I think we can go back to like 2018. I think it was 2018 when this happened. At the end of the year, let me see if I can go back to 2018. 2018 seems like so long ago, but the market rallied all year into 2018. Okay, so here's your 17s, here's your 18s, run, 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 run. Okay. So in the beginning of 2018, we had this dump of volatility. You go back into the end of 2018 after we, had this early volatility event. This would have been a January, February volatility event. The market was down 20%. Boom. Well, I guess not. I thought it was 20%. It's 12%. That's a big difference. This was 20%. Here's the 2018 that I'm talking about. So this started to roll over in October. We're in November. I mean, obviously the market can do whatever it needs to do, but a rollover in October, it's like, well, there's a typical seasonality window. So even in October, this is when things got really ugly after a additional rate hike. Wasn't a cut, it was a rate hike. Different environment. The Fed's not hiking rates right now. So I don't know. I don't think we roll over. Plus the posturing was already done early. October to basically the month of October kind of set up the posture, and December created the follow through. And all it did was gave us a broadening pattern that ultimately gave us, again, you buy the discounts, you get back to all-time highs. And this was crazy accurate. You connect the lows here, okay? Connect the lows there. I mean, it's tough to call a pandemic global sell-off bottom, but within about 100 points, it did. And then you project the highs up here. It's like markets kind of remain normal until they broke out. So you have your measured move, you have your projected move here. Like this stuff is not perfect, but man, like within reason, I have a lot of these trades that I call good enough. If you're up to a projected move, start taking profits. If you're near a projected move, like if it's a time to buy, time to buy. So that's kind of the benefits of just following the charts. So anyway, here we are, many, many all-time highs later. It was like, yeah, not fun. But if you survived it, you made a lot of money. If you survived this, you made a lot of money. If you survived this, you made a lot of money. If you survived this, you've made a lot of money. The key is don't give it back. So, like I said, if I can point out some stabilizers in this current environment, I will do my best. I'm prepared for the downside. I'm not saying we have downside, but I'm prepared for it in case things get a little bit rockier. If anything, the most confusing chart is going to be this: highs and lows. That's going to be the hardest chart to trade because it's going to look like, oh my God, the sky is falling, the market is dropping, or it's just going to find lows and go right back up. But it may not make new highs. It might be in between, right? So anyway, lots to dissect. All right, I'll let you go for today. Tomorrow morning, I will be live 9 a.m. for daily profit play. I'll see you then. Let's see if we can open up our double ups for a nice win in the morning. Double ups here. We're looking to see if we open up around like 67.30, 67.25. That should be a nice winner on double ups. Happy I survived the day. That was good. Certainly better to take a winner. Could have been worse. I mean, I was probably risking $2,000 today. Walked away with about $100. So I'll take it. All right.